Ben Coleman, the Sales and Marketing Manager at Disability Insurance Services. I would like to welcome you to another one of our Wednesday webinars. And you are in for a special treat today. This is actually an inaugural webinar. This is the first time we'll be presenting this topic, which, as you can see on the screen, is titled Reducing DI Cycle Time with Simplified Underwriting. So we're excited for all of you that joined us today from all across the country. We appreciate the time you're taking out of your busy schedules. We're going to do our best to keep the presentation to about 20, 25 minutes to leave time for a little bit of question and answer. Also, for attending today, we want to reward you. We will be sending you an offer that goes along with this presentation that you will see on one of our slides as we progress here. But before we get started, I want to let everyone know that we cannot hear you. You can only hear us. So if there are any questions on the right-hand side of your screen, please do not hesitate to enter them into that question box, and then Dan or myself will get to those time accordingly, or time permitting at the end of this presentation. So this is, as I mentioned, a brand new presentation, a new webinar, so we're excited for everyone to be on the line today. And with me today, it's an honor for me to introduce the president of our company and my mentor, Dan Steenerson, who founded DIS back in 1997. So we're moving into our 15th year, and Dan has been in the industry for more than 30 years now and is really an expert on disability insurance. So it's my pleasure to have him lead this conversation. And at this time, Dan, I would like to turn it over to you. So everyone enjoy.
Well, thank you, Ben. I appreciate that. And good morning and good afternoon, ladies and gentlemen. I know that we have agents and support staff on this call today in all the time zones across the nation. I want to thank you for taking time out of your busy schedules to spend a few moments with us to learn a little bit about something that we're very passionate about, and that is providing Americans with paycheck protection. Now, when I say that, that sounds really nice and quaint, but the fact of the matter is that's a very, very difficult task to do when you take into consideration all of the various requirements that pertain to underwriting paycheck protection, or put another way, disability insurance. Many of you folks on this call today may have written disability back in the day when it was really easy, and others may have written it just over the last couple of years where it's become very, very difficult. Well, I'm here to tell you that the carriers are finding that this product is very profitable to them today, and has been for a number of years now. And as a result, they've loosened their underwriting guidelines and have developed simplified underwriting. And that's what we're going to talk about today, how to maneuver the minefield of getting your cases through underwriting in the quickest time possible. So without any further ado, why don't we just go ahead and get right into that. Today's agenda, we're going to talk about what is simplified underwriting. We're going to talk about the carriers, the products, the features. We'll talk about some sales ideas, and then some cycle time strategy when it comes to disability insurance. Well, what is simplified underwriting? Actually, folks, it's very simple. Simplified underwriting is minimal underwriting for individual disability products. No required financial documentation, no paramedical exam, no blood, no urine, no attending physician statement, in other words, the health charts, and no personal history interview where you have somebody in the home office picking up the phone, calling your client, asking your client various questions that you may have already asked them on the application. That's simplified underwriting. It's a great solution to avoid many of the underwriting obstacles that may deter you from making more DI sales. It's a program designed for clients and agents to streamline the closing process, and underwriting is made easy. Now, the fact of the matter is that we know that 25% of all the cases that show up here in the form of an application are never issued or never put in force. There is a 25% wastage rate. Actually, and out of that 25%, only 10% is declined due to health reasons. The other 15% is declined because the carrier never received additional information concerning financial underwriting or medical underwriting. Maybe an APS is dragging, a doctor's dragging his feet in providing an APS, or maybe there's some financial documentation that's just too hard to obtain. Well, guess what? By now eliminating those two requirements, you're down to only 10% of the cases being submitted not being issued. That's a tremendous increase in your ability to be able to put cases in force. Now, the carriers that are embracing this type of underwriting are those that you see on the screen. MetLife, Illinois Mutual, Union Central, Principal, Mutual of Omaha, and oh, by the way, I just got word this morning that the Standard Insurance Company is jumping into the fray. They hope to have a simplified underwriting program out in the streets in a very near future, and we can't wait. Now, product lines available. As you can see here, it's the three big lines: individual DI, business overhead expense, disability buy-sell, and then, of course, more to a minor sense of marketing is your short-term accident and sickness policies. But it's not limited, my point here being it's not limited just to DI. It also extends into the business market. So as you're working with your business owners, they also have an opportunity to participate in streamlined underwriting. Some of the product highlights is that from an individual DI standpoint, this program is applicable up to $5,000 a month. For BOE, it's $10,000, and for buy-sell, up to $360,000. Now, folks, that being said, do bear in mind that some carriers will have different guidelines, but for the most part, they're all around these dollar amounts that you see on the screen right here. One difference, as an example, Principal Financial Group, they provide simplified underwriting up to $3,500 in benefits. However, if you have 3 or more lives, it qualifies for a multi-life case, and therefore they increase it from $3,500 up to $5,000. You know, one of the interesting things about Principal is that they have this, what they call a benefit update. And with this BU product, they'll actually allow you to increase your benefits in addition to the $5,000 with no underwriting. So it really goes way beyond the $5,000. It's more or less like a every 3 years you can exercise that, and it's pretty much like a future purchase option. As you can imagine, all of these carriers have little tweaks and twists and turns in their products, but by and large, I'm going to show you what most of them are going to embrace. Product highlights: they issue this underwriting process anywhere from age 18 through 64. It's available to all occupational classes. So as you can see here, they're not picking and choosing. They're making a broad stroke to the audience in terms of offering streamlined underwriting. And of course, you don't take a hit. There's no reduction in your commissions because you're utilizing simplified underwriting. Again, the carriers have figured out that they're making some money on disability insurance these days. They're in the black, and they want to stay there, and they want to continue to grow this segment of the business. Well, folks, if you call our sales department, as you see the phone numbers on the screen there, we would be more than happy to send you a simplified DI underwriting guideline, which shows you where there's no financial or medical documentation required, as well as spreading out and contrasting the differences from carrier to carrier. Now, Ben, I don't know if you have a comment that you want to make on this or not, but this is a real fresh new piece that we just put together, and I got a feeling that before long this is going to be obsolete with Standard coming out with their new offering.
Yeah, no, this is a great piece, Dan. I'm glad it's part of the presentation. As you mentioned, this lists the 6 carriers that are currently offering the simplified underwriting program. And I wanted to touch base on what Dan had mentioned with the Principal. One of the unique things about their contract is that benefit update, so that you can apply for the $3,500 minimum if you're an individual, or the $5,000 if you're with a group of 3 or more, and then in the future exercise that amount up to whatever the issue limit is for that person's particular occupation. So this matrix, this is why I love this matrix, this breaks down the differences in each one of the programs from carrier to carrier. So this is what I mentioned earlier too, as the offer that you will be receiving for attending this webinar today. So you will be getting this piece hopefully about an hour after the presentation. It'll also be on our website anytime for you folks to access. And as the carriers continue to evolve, and as Dan mentioned, Standard bringing this product on, we will keep these collateral pieces updated for you. But they are extremely helpful. and it breaks down the differences and the amount that each carrier offers from their perspective. Dan, there was a question about a slide back. I didn't mean to interrupt, but let me see if there's something you may be able to help us with. Somebody's asking what the catch is. If there's no income documentation, no medical records, no personal history interview, what is it exactly that these carriers are going to be asking for? And correct me if I'm wrong, but it's going to be a full application if they qualify or based on the amount that they're applying for. Is that correct?
That is correct, Ben. And thank you for whomever asked that question. It's very intuitive. So going back to what I said about the profitability of this product line, 31 years in this business of doing nothing but distributing DI products to brokers, I have never seen a greater time where carriers are clamoring for business for this product. Again, they are making a real good return on equity, and somewhere around the 15% mark, and they want to continue growth in this area, and they're going to do everything in their power to be as competitive as they can. I don't want to mislead you and tell you that all we need is a signature and they're going to issue a policy. They will do underwriting, but they're going to underwrite off the medical questions on the application. And in addition to that, most of the carriers are going to do a script check. In other words, they're going to go into the great data bank in the sky, and they're going to see, has this applicant been prescribed medication? Are they on medication? And if they are, then that is going to encourage the underwriter to ask for additional requirements. So just because we go into the Simplified Underwriting Program doesn't mean we stay in the Simplified Underwriting Program. If something comes up on script check, in order for them to complete their underwriting process to enable a consideration for an offer, they will come back and ask for additional health questions or an AP, attending physician statement, or actually blood and urine or paramedical exam. So you really got to look at the application itself. If the applicant starts reading you off a number of maladies that they are experiencing, and that's recorded on the application, more than likely they're going to get kicked out of that simplified underwriting process. However, that being said, by and large, most of our simplified underwriting cases that go in stay in that way. It's just those that have enormous amount of health history where you're going to get kicked out of this program. Okay, well, let's talk about some of the program features. For example, discounts are available to multi-life, association, and for the self-employed applicant. There's a number of association endorsements that we have around the country, and just because you're a member of the association and you're getting a discount doesn't mean you'd be disqualified for Simplified. That's still part of the offering in these portfolios from these carriers. None of the riders are excluded, such as the own occupation definition, the COLA, the residual, the future purchase options. All of those are included in the program. All elimination periods, 60, 90, 180 day. All benefit periods, 2 years, 3 years, 5 years, 65, 67, 70. All of those are inclusive in this program. And, of course, the own occupation definition. In other words, you're liberalizing the policy by adding all of the riders and definitions and enhancing it with the longer benefit periods and so forth. That does not disqualify your applicants for simplified underwriting. Well, that pretty much tells you over a good broad stroke what this program is all about. But I want you to have more from this presentation that we give to you. I want you to walk away from our time together with an idea. And the idea is that we find that most sales starts with questions. Remember the old adage, selling is not telling. Selling is asking questions. The more questions that you ask, the closer you can go down the road of actually making a sale. So here's a question you should consider when you're talking to your clients or your prospects. And that question is this, and of course, we're assuming you're talking to an affluent client, because really and truly, we do have DI products for the blue collar and for the gray collar. But initially, this product was designed for the affluent. The affluent understands that they have a lifestyle, that they have many years in their business or their profession that they've built up to where they're at a point in their life where they need to look out for themselves and safeguard their higher income. So in this instance, if you're talking to an affluent client, perhaps $100,000 or more of income, here's a wonderful question to ask them. Would it make a big difference in your lifestyle? Would it make a big difference in your lifestyle if you didn't have $200 a month for your expenses? And most people making $100,000 a month are going to say, no, it doesn't. The follow-up question is, would it make a big difference in your lifestyle if you didn't have $4,000 a month for your expenses? And of course, you know where I'm going with this. They would certainly say, oh, yes, $4,000 is a big dent in my income. And as you can see, the $200 is the monthly premium, and the $4,000 a month is the monthly benefit. So you're exchanging little dollars for big dollars. And that $4,000 is really tax-free if it's paid with after-tax dollars. So that $4,000 is really more like $6,000 a month, right? So the way to really tie this into your client is to ask yourself, what is my client's income? And then take 2%. If you want to be safe, take 2.5%. 2.5% will buy them 60% of their income after taxes. So that's your big dollar, small dollar comparison from a sales standpoint. Now, let's go to the next slide. Here's another one. Would you want a financially strong company to protect your life, your car, and your home? Very simple question. Easy question to ask. Would you like a financially strong insurance company to protect your life, your car, and your home? And if they say yes, and of course you'd expect them to say yes. You would say yes. I would say yes. Of course. It makes sense. It's a silly question. But the response is this. And of course, this is a question that you would ask somebody that doesn't believe in paycheck protection. You would follow up that question with this question. Then why would you pick the smallest company to insure your greatest asset, your income? And they'll roll back on their heels, scratch their head, and they'll say, well, what are you talking about? Well, the smallest company is their wallet, is themselves. They're self-insuring their greatest asset. And oh, by the way, your car, your home, your assets, they all rest on this bedrock of income that you make year in, year out. You lose the income, you lose the house, the car, the boat, the assets. So why would you pick the smallest company to insure the greatest asset, your income? Well, I hope that's been useful to you. I know that I've shared that with many producers over the years, and they've found that to be very motivating in talking to their clients and prospects in helping them better understand the need for paycheck protection. So let's talk about strategies to cut the DI cycle time. Submit a quote request, confirm the carrier appointment, ensure all application forms are current, submit the application. That's actually the cycle in itself, and we are here to help you with that cycle. In summary, we've talked about what simplified underwriting is. We talked about the carriers, the products, the features that are provided, the sales ideas, and some cycle time strategy. If there's anything that we can do to help you folks, please feel free to give us a call. Here's our 800 number. Here's also a screenshot of our website where you can actually visit to request quotes on your clients. Our goal is to be a company that can provide you with disability solutions for your clients in a most timely fashion to where you can be proud in your representation of the carriers that we suggest to you. Ben, I think that's about all I've got. I'm going to turn it back over to you.
Thanks, Dan. And before I wrap things up, take a look to see if there's any questions on your end. But, folks, I just want to reiterate a couple of things that Dan said, and that reducing the cycle time in that process, that's really where we're here to help. As Dan mentioned, you know, the first step is submitting a quote. You can do it through our website. You can call us. You can send us an email. We are going to turn that quote around for you in 24 hours or less. And if they qualify for the Simplified Underwriting Program, if you're requesting the benefit amount that falls into that category, that's going to help streamline your process even further. So that's something that we will help make note of when we're running illustrations and when we send them back to you. And then, as Dan mentioned, the next step, let's make sure once you sell that particular carrier, let's get you appointed as soon as possible and make sure that you're appointed with the carrier through DIS. We'll make sure you have the most up-to-date application. You help your client complete that application. and then you submit it to us. We'll scrub it. We'll push that onto the carrier. And anyone that does qualify for this simplified underwriting process based on how they answer all those medical questions on the application, it really will alleviate a lot of the time and the obstacles that people run into when it comes to going through the full underwriting process. As Dan said, sometimes there's wastage because we don't get income documentation that we need, or APS reports, whatever it may be, medical records. So it really is a great process. As you can see from that matrix, there are carriers on board. We're here to help promote it. We're here to help you understand it. And we want to make your life easier when you're out there selling paycheck protection to your clients. So visit our website. As Dan pointed out, you can submit the quotes there. You can listen to other webinars just like this one. We've got about 10 or 11 that we've recorded for you they're also sales related and educationally, or some educational webinars that can teach you a little bit more about the DI industry and the DI products that we represent. Again, thank you for joining us on this inaugural webinar, and we look forward to seeing you and hearing from you next week on our normal Wednesday webinars. Dan, that's it for me. Were there any questions before we wrap things up?
Yes, Ben, I've got one question from Stacy. Stacy asked, do they underwrite the financial at point of claim? Stacy, you're thinking 3 steps down the road. Thank you very much. That's a very intuitive question that you're asking. The answer is simply yes. Folks, what they're going to do is, even though the carriers may not ask for financial documentation up front, come time of claim, they reserve the right to request, and I got to believe that they will always request financial documentation, and they'll take that financial documentation during the time period that the applicant applied for coverage, compare the financial documentation to the benefit that was issued to make sure that they would have qualified for that benefit at time of application. So it's going to be important for you and us to make sure that we show you proposals that you pass to your clients that are reflective of what their income actually is. I know sometimes when you're dealing with business owners, they try to write everything off, and when you ask them what their income is, they'll state the gross, when really and truly what their income is, when you look at their Schedule C, is much less than the gross. So we've got to look at that net income at the the bottom of that Schedule C. But Stacy, again, I applaud you. That's very intuitive for you to ask that question, and the answer, simply put, is yes. They will ask for financial documentation at time of claim. Ben, that's the only question that I've got on my screen. Folks, again, I want to thank you so much for the time that you spent with us today. We hope that it's been beneficial. If there's anything that we can do to help you in the future, please, by all means, feel free to call. Talk soon. Bye now.